Good afternoon, everyone. Today is 9/15, so September 15th. Month's already halfway over. Just seemed like it just started. My name is Steve Vetterl. I'm the firm's chief market analyst. Essentially, it is a big fat title, but all it really means is that I'm your risk manager. Try to keep everybody safe and with the right settings, hopefully the stuff that's been exceptionally vetted out, and that we don't lose any money, right? But in all fairness, that is a fallacy. We always lose money in trading. It just depends on how good we run our settings. Let me also let everybody know the Q&A window is open. Chat window is open. So if somebody could please put in that sound check. You can hear me okay. See the risk disclosure screen. Trading in the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin and utilizing leverage can carry an even higher level of risk that can add to a complete loss of investment funds. Before deciding to trade the foreign exchange markets using any of our software alert products, you should carefully consider and diligently your personal investment objectives, level of experience, and risk tolerance. Most importantly, as I say every week, whether or not you can actually afford to lose the money. So today is going to be a fairly quick call. Not a lot going on in Forex land, and in really the only thing that's actually going on is a rally in equity land, which seems like the mantra this entire year. But typically you have a lifting of all markets, especially with a super accommodative Federal Reserve Bank, along with all the other central banks around the world in terms of their sprinkling of cash down on capital markets and primary dealers. So switch over to the next page. If you guys are sharing any of the results, do not use the term company settings. This will give our regulators a reason to build their resume. We don't want to give them that kind of luxury, right? So Auvoria Prime does not have any recommended settings. We're not a financial advisory firm. We just license software that comes out of the box with default settings that you can always adjust with your own risk. Some software does come with default settings upon initial setup. I talk about maybe some changes to that. We had a big new settings introduction on Saturday. So if you have not seen it, I would highly suggest communicating to your up and down line about David's presentation on Saturday. One caveat, as I switch over to the Forex screen here, I personally, as many of you already know, I don't dig into these settings. I just sort of come at this from the guy in the ivory tower, right? I mean, I have a lot of people that come at me with different settings. We try and vet as many of them out as we can. I'm fortunate for us as a group, as an organization, I should say, and the thousands and thousands of subscribers we have. We have other products coming out, most closely Variable, which does not require any of what we've been talking about the last 4 or 5 months, right? So the settings are not adjustable. Doesn't mean you shouldn't pay attention to what's going on with the software, because one thing that is adjustable with Variable and some of the others is not only the signals you get, but also the different types of currency pairs that are most optimal for it to trade with. Okay. So let's see, are we sharing the Forex screen? So I mentioned on Saturday, Wednesday, my suggestion for anybody that is up or has a little bit of profit this week or is in just a wee bit of drawdown is to close out before Wednesday, because I have no idea what the Federal Reserve is going to say for their big meeting, the FOMC press conference. If you ever understood, or if you ever did not understand what FOMC is, it stands for Federal Open Market Committee. It's a board of 12 governors, including Jerome Powell, that runs our central bank. You can do a deeper dive on it if you wish. Federal Reserve's actually got a really good website. It's good to teach kids. I've started to teach my son about how the money supply works. So I'm choosing to do differently than most parents, and I'm going to teach my children first how money supply works, just like you'd learn in a macro or microeconomics class. And I'm going to move into a discussion of how money supply affects all kinds of goods and sold based on GDP and total production of capital markets. And we're going to move into an understanding of the different types of assets. Seems like some crazy endeavor, right? And I'll tell you, actually, I have for anybody that's interested in educating their children I really probably, unless your kid's a super whiz, would not bring this up to a child that's probably under 12 or 13 years old, which my son Evan is at right now, and he has the acumen of somebody that's 18. So I think it's good that he can sort of soak this up. But I have a really good book that I sort of underground co-wrote a number of years ago for actually a fairly wealthy client who had children that just wanted to understand money. You know, it's something, unfortunately, to a lesser degree, unless you're in a hardcore business school at the university level, kids just aren't taught the value of a dollar, the understanding of how money supply works in relation to assets you can invest in. I mean, hell, they never even, I mean, I got out of finance school and they never even taught me, and this was back in 95, but they never even taught me how to open a damn brokerage account, right? I opened my first brokerage account at Fidelity Investments in like 1996, and I never even knew how to do that. It's crazy. So I think it's important to educate your kids about that, but you guys can always send me an email for anything you have a question on. It's svetteral@auvoriaprime.com. If you're going to send me an email, please include my FX book. Keep in mind, I've gotten a lot of questions on that. If you Google my FX book, there are tons of YouTube videos out that have actually been shot quite well on how to set it up. But it has been recommended by a number of people, and a whole bunch of new subscribers in our downline. We're welcoming a pretty large team coming underneath ours, which is great news. But I think I'm going to shoot an additional video since I'm sort of in video mode and I got my cameras and everything straightened out. So I'll be able to go live for some of these calls as well, as long as you guys keep the comments to yourselves. In any case, so that's the news. What's going on with Forex right now? I do see some treachery. Obviously, Wednesday, probably be wise starting tomorrow to turn your systems off. Because I'm seeing some questions coming in, do ask the questions in the Q&A window, not the chat window. Now, one of the questions I know I'm going to get asked, I probably will see like 20 of these coming in. I've already seen a whole bunch of emails. Okay, we have not gotten, nor do I think we will have corporate approval to disseminate David May's spreadsheet that he presented on Saturday. Okay, I do understand his settings sort of correspond with the spreadsheet. So I think what I'm going to do is, as I gain a little deeper understanding his settings, I'm going to present a more generic way to look at, because essentially at a very high level, his settings aren't that different from what we've been talking about. And again, I'm not going to go through the whole meeting. You guys just have to watch the recording from Saturday. You can skip past what I'm talking about in the beginning if you just want to get right to David's stuff. I think it comes in at like the 17th minute, something like that, the 15th minute. But there are a lot of risk calculators in Excel format that are being shared in many, many up and down lines out there. So there's some good ones. There's some really good ones. I had David convert the one I'm using to US dollars, but there's a Euro version obviously he's using. And it could probably be converted to other currencies, but I can't do that for you guys, nor can I post that on my channel, because honestly, that spreadsheet, that is a resume builder for a regulator right there. Why? Because it's showing potential performance, right? So it'd be under the worst of the rules out there, which is promising performance. We can't do it. We can't give these guys a reason to build a resume, okay? So I want everybody to think hard about that, communicate that to your up and down line, because again, even though my role as a risk manager is to try and keep everybody out of trouble and in a profitable and a low risk situation, we're putting ourselves at high risk compliance wise if we're sharing all this stuff in up and down lines that the regulators don't want to see shared. I mean, it's okay to share it with your team if you're a leader, sharing it with your up and down line guys. But as a corporation, we can't come out and do that. Okay. So, I'm in a gray area here by even allowing David to talk on these calls, which I don't know I'm going to do a lot of down the road. I just do really love his work. Guy has spent a tremendous amount of time. He's another Johnny Neutron on the team. And, as one of the directors at this company, I want to find a whole bunch of Johnny Neutrons, right? And one of them makes my job easier. Two, it brings lower risk and better, more vetted out settings to the team. Okay. So with that being said, let's take a look what's going on. Equities, notice they're holding on a line right there. Let's go over to the DXY. Again, still stuck in that really tight range after a very protracted move in June and July. Don't really have a lot to say about this at this point. Let's take a look at the euro. Again, still stuck in a tight range. The good thing about this is Martingale Systems, which is what the underlying trading core is of both Einstein and Alexander and a couple other, there's tons and tons of expert advisors out there in this world in Forex land and futures and regular equities land that trades based on a martingale system. They flourish as long as they're on the right side of the market in tight bouncing or consolidating periods of time like you're seeing right here. Okay. So, because I get a lot of questions, well, why did the XYZ system, either Einstein or Alexander, why did it take the opposite side of the trade, right? And, rather than explain all that out, if you guys go through some of my previous discussions, I promise you every week there's some nuggets that I more than likely have forgotten about what I said in the meeting. It just sort of came out when I was talking that will help you guys in understanding how a martingale system operates. Some of the newer pieces of software that are coming out that we're super pumped about, they're not martingale. Some of them are trend following, which certainly would have worked better during this period of time, right? One of the last things you do on a breakout from almost a perfect couplet handle, this is a phenomenal trading pattern. You guys can see the cup right here. Here's the little handle. It broke from this. And typically when you have a solid break on, especially a higher time frame chart like a daily, the thing just breaks and runs. And it did to another period of consolidation, which we've seen. So at some point we're going to break out. My thought processes, and it's good that we're spending some time balancing in here because it makes it more of a believable pattern. So we know that if we drop back down here, the 14 area would be darn near a really hard support line, in my opinion, maybe even as high as the 1450 area, right in that whole window of 50 pips. Would be a good area of support. But, again, looking at the DXY, as I've been talking about for damn near a month now, looking at this on a higher time frame chart, you can see that more than likely the magnet down here is going to be somewhere in the 85 to 88 area. That's where I say we go next, provided the U.S. continues on its path as a country of taking on more debt, which is obviously devaluing to any country's underlying currency. So for lack of a better understanding from many of the questions I've gotten via email, why are we going down? Why is the dollar dropping? Well, it's because of the levels of debt and another area of stuff that we're taking on as a country. So just understand that. You can ask questions if you guys have any questions on that. That is the US dollar. I've covered the euro. Let's take a look at the GBP USD. Now, again, this bounced hard off of the 200 MA. This is just a simple MA, guys. I've gotten a lot of questions on why is this not an EMA or this is an EM or why do you not have the 50 line on there? I mean, you could put any of these lines on there you want. I'm trying to keep this just super simple with just some basic support and resistance lines. So technical analysis of just using candlestick charts with volume at the bottom. Okay, so I can get everybody on the same page, and we can move into maybe a slightly deeper view technical analysis wise, which will really help those out there, especially in the US with all these products where you've got to accept the trades. It can't be more of an expert advisor just putting the trades in for you like Einstein does. You got to kind of have an idea of what's going on in the broader picture of the market. Ideally, I would have loved to have had all accepting trades with Alexander during that entire period of time where the euro broke out and was just lifting, as most other dollar based majors were at the time. They were all lifting as the dollar was falling. I only would be accepting longs at this point on a pullback. I probably would not have accepted shorts unless we had moved to some significantly higher level really quick. So we got really stretched out some sort of standard deviations. I talk a lot about the rubber band. I would have accepted that, but for now, I would have only, as some on our team did, and I got lucky with a couple. I did not take a lot of shorts on this way up. This put a lot of pressure on some accounts back then. So our hope is an organization to have, obviously a much deeper bench or a much broader breadth of products as far as the offerings to the subscribers. Some are going to have different trading systems than others. Some will not be acting as Einstein and Alexander did. They did not act that great in this lift. But other pieces you guys will see coming out, they totally did. So it's just, again, all a matter of diversification, which is, obviously what I stress as an advisor to my clients. So the one question I got, this is the Forex calendar. We look at the coming week. We only look at the red folder events. And it helps us, sort of stay out of rough areas of trading, because as you will certainly come to learn, the Forex markets, probably more so than a lot of others in the world, they can have much more extreme moves. It's not going to be as extreme with something like the Euro US dollar, because this is accomplished anywhere between 25 to 30% of the daily volume, has the most participants, has the most volume from an institutional investor perspective. So, you're usually not going to see the Wild West, as we say, in moves, or the crazy exaggerated moves that are out there. The book, Roger, Marilyn, Roger, you guys asked a question. It's just a book I wrote. So it's not, it is, a couple people keep telling me I should go to Wiley & Sons and get it published, but I haven't, because the book's all over the place. But it teaches money to young teens. It's just called Money. It's just called Money. My discussions with my daughter about money is what the title is. Right. What else do I want to show? Here is the denominated in euro live account. I'm running so we initially put in, what you guys can see here as I get you more acclimated to understanding my FX books. And by the way, I've gotten a whole bunch of other questions out there where it looks like we're welcoming a lot of new subscribers. So good to see everybody on the team, guys. Stay positive and stay tuned, since we've got some killer stuff coming down the pike. But occasionally I funded this account 24. It's a little bit under 25 G's, taken out about 3,700 in profits. Counts up 22. This is Einstein. This is 0.01 lot size per 3K. So it's a very conservative from a lot size perspective. This account is also running on what's called our conservative settings, which are right here. Okay, so again, for some of the newer subscribers, I know this is going to seem a bit like a broken record to some of our senior folks, but these are the settings in the account. So we flip-flop the range multiplier and position size multiplier. Do keep in mind that these numbers are different from what David presented over the weekend. His numbers were lower than this, both cases. He also has a range between level set at 25, okay? And he's also running his settings on less pairs, okay? He primarily chooses to run this on just, let me close this out, on just the Euro USD. Primary currency I mostly show. For one of the other questions I just got, here is a chart on Euro JPY. It's been more of the terrorist, if you will, of the currency pairs in our portfolios. You can see this move was big. And a lot of Forex trading EAs out there. A lot of the algos they did not do well in this period of time. I saw a couple that we don't use here at Auvoria, but just blew up some accounts because it just didn't have the right risk parameters set for it. But Euro USD, GBP NZD, again, holding firm at a really big support area, guys. Okay, this whole area. USD JPY for the other question. Notice we're beginning to become a real tight range. So there is a chance that we may have a breakout from this. This does not mean I'm telling you to turn the pair off. Because inevitably when I make these statements, a lot of people come back and say, well, does it mean I turn my pair? No, it doesn't. Because the software can catch some great parts of this. And those are some fantastic moves. All right, so that's pretty much all I want to say from a charting perspective. Taking a look at the big account, we've actually had a really nice lift in this account just in the last, for those of you who haven't seen the numbers on this thing, this is our best month ever last month from our worst month ever in July, where we were in a pretty significant drawdown. But this is just a great example of, yeah, we probably could change the settings on this account and have it just sort of rock and roll more. But then we're putting more risk in having some of these drawdowns or some of these drawdowns be much bigger. Notice a lot of these drawdowns, they're small. See that? And it climbs right back out of it within, at most, 2 or 3 weeks. Okay, so maybe closer to 4 is what you're seeing here, but this is a really volatile period of time. So the further we go, and granted, again, you know, we're making the argument we have a lot more data. We're making the argument that I should say we're proving the argument that the high volatility settings do work. It just takes time. You know, and I get it. There's going to be some newer subscribers out there like, well, geez, you know, I could look at some other software and it's rock and rolled a lot more. Yeah, that's true. We are continuing to bring different pieces of software to the board. Some are going to want the ability to accept or deny trades, right? I have a number of folks on our team that come from a pretty significant background in trading, but we have just a looking at like there's certain trades they want to accept and not want to accept. So it's more of a control thing. And that's why an Alexander really fits in well with that. Doesn't mean you need to shift from Einstein to Alexander. Okay. Do keep in mind, one takes care of it 100% for you. And the other one, you've got to accept the trades. There is, in my opinion, a heightened responsibility that comes with accepting those trades, because if you're doing the right thing for yourself and you're learning a little bit about technical analysis, what to accept, what not to accept, you're kind of stepping in front of the software, right? Sometimes maybe you may not be able to get to your systems to accept all of the trades, on the app. MT4's got a really good app for the phone. And if you haven't used that to accept or deny trades or just ignore them, you might want to download that onto your phone. What else do I want to say about this? All right, so here's the settings on this account. Open up this window as well. Do note the 500 stop loss was increased. Okay, it's just casting a wider net. I would like to, because I'm going to be setting up. Our tech guys just have so much stuff to do. I fall very, very further back in the line and getting things done for it. But I want to start setting up a demo, hopefully this week, on the David settings. I want to put a live account on David settings as well. And just essentially let it run, and we'll be able to compare. Part of this also is over long periods of time, as I know Cameron's showing on his software calibration. He's one of our new EA coaches. Cam's a very accomplished trader, also runs a pretty big team, as you guys may know. He has a software calibration that you can tune into. It's going to get a little more detailed than what I do, and I've only got so much time. I just want to cover a lot of subjects quite quickly. What we've gone through in detail in some of my past of all these settings. I do not know, as I see the question come in on variable. By the way, it's spelled VERI. I don't know when it's going live. So one of the questions was, which software would you suggest new customers get in? I would have them wait for variable. Okay. Remember, the way this works the best, as far as you guys building just a massive affiliate downline, is to put something in place for your downline that doesn't require as much work as we spent the last 4 months, right? Doesn't have as much volatility. We'll cut losses quicker. And now, essentially, those are all the things that Dasan has designed Variable to accomplish, and it has done it quite well over its period of time. I'm not saying to abandon Einstein or Alexander. I'm just saying you will have different degrees of subscribers that you're bringing in over the years. We have some that are very sophisticated on our team, including a couple of the global directors that run our teams. So we're maybe a bit further ahead than a lot of teams that don't spend their time educating everybody on the downline like we do. But we have very little attrition because of the fact that we attack it much differently. Plus, I basically run it like the Third Reich. I'd force everybody to watch my videos, or they basically get lambasted. But the settings as well. There's all kinds of fun that can be had with all these settings, just to sort of answer your question in a long way. But right now, if you have someone that comes in that's sophisticated, they may prefer to just accept trades from Alexander over having something that just does all the trading for you, right? So next question is, I'm in Canada. What settings stop Einstein from placing more trades but still automatically maintain the trades at movement? So I'm not sure I understand the question. What settings stop Einstein from placing more trades? The answer to that would be for you to turn off the auto trading. That's the button right here. That does not close out your existing trades. It'll still continue to manage them, but it'll essentially turn the auto trader off. You can also do a lot of other things that we've talked about ad nauseum as far as adjusting the different pieces of the software. That answers your question. Yeah, I mean, nothing changes as far as target prices and stop losses. We are thinking. That's a good question. I don't know, Michael. Sorry. You guys are asking me to read the crystal ball, and my crystal ball broke. Let me just read through these. What do you guys, everybody that's listening to this call, what you guys should be asking yourselves right now is, have I communicated to all of my team? I don't care if it's thousands of people underneath you. Do they subscribe to Steve's Telegram channel? That's the question you should be asking yourself right now. There's a good question. Historically speaking, how many times have you seen your accounts hit your equity risk protector? The answer is 0. Because our settings have always been conservative. Now, and to answer the rest of this question, let's go over and all right, so I'm all signed in here to my FX book. Let me switch over. It's just 3K high volatility account. What you guys will notice is we've gotten out of drawdown here. You can see that $428 drawdown. This account didn't do that good last month as we had just basically took a lot of heat. By the way, this is another example of why smaller accounts, right? Because this is just a little 3K live account, but why smaller accounts, it's tougher to make money in. I know that's not something the troops want to hear, right? But you notice our large account didn't take as much heat last month. Only had like a 2% loss versus damn near 12 in the little account. They're running the exact same stuff, guys. Same pairs, everything. Same account, same broker, right? We're all Lucror. So as far as which is LCM FX here. So this goes to show how, larger accounts you've got, a super conservative settings on. We're 0.01 on this, just like we were the big account per 3K. But the problem is in my opinion, this is why I brought David in last week. We're running on 3 pairs. I don't think it should have been running on 3 pairs, right? I think the beating that this thing took from a Euro JPY standpoint could have had this account very much in the black right now. Does us no good at this point. Can't change the past, but we can learn from it. As I always tell my kids, most people that are just miserable on this planet, they spend way too much time lamenting on the past. And I don't think that's necessarily a bad thing, but learn from the past, but move forward, right? That's why I always like those Toyota commercials. Moving forward. We're learning from the past. We're moving forward. We're not getting stuck on it. I can't tell you how many people I met in futures land trading the different type of instruments than Forex that would put 10 grand into an account, put a half-assed effort into learning my course or some other course that they were involved in at the time. Those goofballs at Trading Academy in Irvine, they got a big following out there, but a couple of good educators. It's real costly stuff, but they put a $5,000 or $6,000 into going to some online Trading Academy stuff, and then they throw 20 grand into a futures brokerage account and take a couple of trades to blow the account up, and they'd be done. Don't be that person, because essentially the loss of the investment funds and or one's lack of education. Now, obviously, this is manual trading. It's much different than what we're doing here. The software is doing the trading for you here in varying degrees. But the important thing is that the ones that always were super successful are the ones that came right back, just like a baby falling over trying to walk, and they funded accounts again, or maybe they took a step back and funded a demo, which is usually what I suggested they do before going live, and then they got their feet on solid ground before they went live again. In some cases, I would see traders on sim for 6 months, right? And then the argument always comes back is, well, I got to pay the subscription. Guys, the subscription costs are dropping a bunch. So there's really not going to be a big argument, because Auvoria is doing just unheard of stuff in this industry, like dropping subscription fees. So you have a much better shot to get in and run it. Yeah, you're going to spend some money on it, but it's worth it. Think of the alternative. If you wanted to learn to trade in manual trading land, or what I call discretionary, you'd have to fund the account with 10, 20 grand to trade the futures markets. Put 6,000, 7,000 hours into learning, probably about 5 to 10 grand with a mentor to help you cut the learning curve way down. And then you have the ability to make, 6, in some cases, 7 figures a year if you know what you're doing. There's plenty of these people I follow on Twitter, guys, out there. As a matter of fact, if you really want to, because I get a lot of questions about this, here's my Twitter handle. It's @FXESTrader. You guys don't have a Twitter account? Set one up, man. There's a ton of good stuff out there. There's a ton of crap out there, too. But if you stay away from all the BS, politics, and social nuttiness and just focus on using Twitter as I do for business purposes, there's a lot of really good people out there that I follow. And, they all are experts in their own right, whether they traders, research companies, Forex guys, ex-hedge fund guys that have been very, very forthright with what they do. I mean, there's a ton to learn from some of the people that I follow on, and I retweet a lot of their stuff. This is a great educational opportunity. So the tool can be used for something beneficial, in my opinion. So, all right, what else do I want to get into here? Take a look at the. Yeah, you're welcome. Thank you. When you say close out by tomorrow, are you saying to close all trades? No. So, Jeff, if you're in drawdown, which I guess I probably should know the answer to that question, right? Because it's more specific advice. But if the Einstein or Alexander's in drawdown, you just want to let the software play out. Don't step in front of it and think that, or I think that I'm smarter than it, because neither of us are. As you guys are beginning to see more and more proof, if you will, of we have the ability. It's taken some time. We have the ability to pull out of a pretty significant drawdown as this 3K account was in. So, this is 6 months, passive. I typed it into, actually, yeah, you guys should be able to see that. It's in, do you guys not see it? I posted it in the chat room. You don't see it? Here, watch this. I'll do one better. Let's go to the channel itself. Let me log in here. Twitter. Here it is. So as you can see, it's FXES Trader right here. I follow about 194 people. You can go through and see, some of the guys I retweet the most are the ones that provide the best value and is a real expert, especially real vision. David Hunter, this guy's an absolute whiz, I'll tell you. Why this guy was never running a big hedge fund, I will never understand, but he doesn't seem to give a rat's ass about money. Linda, she's super what she does. So is Pack 77. This guy's a massive futures trader. Very, very generous with his knowledge. So you can see that everybody I have picked in here, it's all related to just trading for the most part. And you can follow them. I pull a lot of this out. I actually use a program, if you guys have never seen this before, called TweetDeck. So a lot of times you see in my videos, this system's open in the back. There's a couple of guys on Twitter that actually have feeds that are so super fed, they'll hit the big news stories before the main ones will hit, whether it's Thompson's or Reuters or Bloomberg or, God forbid, these knuckleheads on CNBC. It'll hit the feed faster than it hits API. It's pretty slick. So we'll know, especially if we're trading something live, what's going on. But as you can see, Tommy Thornton's one of my buddies, runs a big hedge fund in Connecticut. And a lot of the different stuff, Mark Newton, smart guy. So again, a lot of this is more oriented towards equities, but you'll see a lot of comments in Forex land. I still think that they all sort of feed into each other. What's going on with the US dollar feeds into commodities, feeds into currencies, obviously feeds into the equity markets as well as credit, which is mostly the bond markets, the largest in the world. All right, so just delete a couple of these. Asif, if you're so worried about the equity protectors, you've asked me like 6 questions on it, bro. I would just wait and get variable. By the way, Peter, the question you're asking is a good one. I have just a ridiculous amount of depth in explaining the increasing or decreasing of the percentage on the total account equity risk on a number of the Saturday calls I've shot, specifically the ones in May. Which, by the way, I'm not really sure if they brought that archive back into the back office. I totally forgot to ask that question because I think let's take a quick look at this first, you guys. Just log in here. If you guys haven't seen, they changed the website around, by the way. It's pretty slick stuff. Show this to your team, especially for the people you're looking to recruit, because this has really they've done some great stuff. Here it is. All right, so you go to the dashboard in your back office. Just click on whatever your product is. In this case, Einstein. This products I got connected, although I have them all connected. And you can see all the onboarding stuff here. But more importantly, if you go to the resources tab, down to forecast trade week, these are the Saturday calls. Go all the way back, see the entire. Looks like August 23rd is where it stops. So. I know they have these archived somewhere. I wonder if it's just on Vimo directly. So let me get back to you guys on that. I'll put the answer to that on my Telegram channel, because I think I said I was going to take care of that. I was a bad boy. I forgot. All right, what else? I think that's pretty much it, right? Oh, you're welcome, Dr. Jeffrey Cap. What type of medicine you practice, doctor? It's good stuff. Most of my physicians are plastic surgeons and orthopedic. I have a couple ID docs as well. A couple dentists too. Let's see what else. Looks like we've had a lot of requests for this book. Maybe I should publish this damn thing. Looks like you can self-publish these things now with Amazon, from what I understand. So I'll take a crack at that. Anyway, all right, I'm going to end this right now, you guys. If you guys got any other questions, you can always send me an email. It's fine. sfederal@AuvoriaPrime.com. Follow me on Twitter. I sound like one of those crazy social media dudes, right? Follow me on Twitter. This is, looks like I got a couple more questions about this. So it's just, here, I'll show you. @FXDSTrader, set up a Twitter account. Do yourself a favor if you're on Twitter. Don't get caught up in all the mania. 99% of what gets posted on Twitter is completely fabricated, or it's just BS. So do yourself a favor and let your heart not be troubled. Use Twitter to your advantage. As I always tell you guys, use these things to your advantage, not your detriment. So, but again, today's the 15th September. Wishing everybody a may the trades be with you type of week. My name is Steve Vetterl. Off the mic.